Hey YouTube, this is Zach with Achilles Financial, and today I wanted to showcase the US 10-year Treasury yield. This is something that we used to talk about a lot more frequently on the channel, but I wanted to highlight that we've started to see movement again in the 10-year yields. Now, a lot of this you can see is coming back off of a very sharp decline in 10-year yields at the end of 2023, which coincided with a lot of the increasing prices associated with tech stocks. Now, as the 10-year yield has begun to increase along with other yields, you're beginning to see some of that pain trade in tech. However, a number of other investments are continuing to do well this calendar year, and the S&P 500 continues to perform very strongly this calendar year. I did want to highlight that this move right here is showing a pretty sharp increase of nearly 0.5%, or really 0.5% at this point in time, which is going to show a large yield that you can have for a lot of the institutional investors, where you can have essentially a risk-free investment via investing in US Treasuries. So if I have the option to say I can lock in a large sum of money, for example, let's say $10 million of investment, this is something that means you're going to get $430,000 every single year, quote unquote, risk-free, as long as the US is not defaulting on its debt. So whenever we see these sharp moves upwards in some of the treasury yields, that's when you're going to start seeing some of the movement from more volatile investments such as stocks into some safer investments such as treasuries and bonds. One thing that I would note is we are at 4.3%, which is still not reflective of what we saw in October through November of last year, where those yields almost hit 5%. So if we begin to see that movement, expect additional pain associated with, in particular, the tech trade. One thing that I would note that could cause this to rise higher is if we have a hot inflation print tomorrow, which would mean that we are going to have a lower expectation of rate cuts this year, meaning that the dollar will tends to be stronger in that environment. So there's a lot of things to watch, in particular yields, CPI, and the expectations around the Fed rate decisions for the remainder of this year. Let me know in the comments down below if you've ever purchased any bonds and what your expectations are for CPI. Thanks. Talk to you later.